What's up, traders? It's Mark Sebastian, your only option, and I want to invite you to a special trading education session I'm doing this Friday at 10 a.m. Eastern Time. I'm going to go through what is the one ticker I'm watching in this market and why. I'm going to give you my overall market evaluation. I'm going to teach you how traders find the one ticker that is guiding the market. We're going to look at options expiration. It is quadruple witching this Friday. I'm going to explain to you why it was so important, what options and how many are expiring, and what happens after these big witching days. Finally, I'll go through other major events that are happening, notably going into the 4th of July weekend, and a trading strategy using VIX that we can implement into the long weekend that is the 4th of July. You do not want to miss this. So what I want you to do is join me Friday, 10 a.m. Eastern Time. I'm Mark Sebastian. I am your only option. Have a good one.
Hey, where is everyone? I'm in here. Okay, we had a quick ad. There. Well, that's okay. That's okay. There's nothing wrong with a little promo, a little promo notion for you guys. Welcome everybody. This is going to be awesome. We are going to talk about this market, which is a little bit exhausted, right? Wouldn't you say it's a little bit kind of exhausted at this point? Let me share my screen here because I want to show you guys a couple of things. See if I can do this. I'm going to do this. Can everybody hear me? Yangsta, can you hear me? Good morning, all. Laid back as. Good morning, good morning. You can hear me? Okay, good. I'm going to turn that off. Am I actually in here, Christian? Okay, good. I am in here. Okay. So let me share my screen because sharing is caring. Sharing is caring. And I care about you guys. Here at Option Pit, we care about you guys. We don't just give you any old schlock. We think, we ponder, we work on strategies. We try to give you the absolute best we can. And in line with that, I am Hans Albrecht. I have been doing this for almost 3 decades. My goodness, it is, the time has flown. I just remember my son being born. He's 15 now. Holy moly. But I've done this for a long time. 1 billion in option strategies managed. I was a market maker. They sure do, Jose. I was a market maker for 15 years. So really learning from the ground up, really learning the math. Back in when I started at that, you had to rotate the options markets. You really had to understand the math. You had to be able to look up at the screen and go, okay, there's a conversion. There's a reversal. There's a box, kind of the relationships. Now the computers do a lot of that stuff for us, which is good. But that was the way to learn. For 15 years, I did not get a check unless I made money. Not a check unless I made money. And I'll tell you what, that can be stressful at times, but that is a way to care about every single dollar. So you'll find if you're in turbo income, doing anything I'm doing, I am always worried about every dollar. And I think you should be like that, right? If you're just throwing darts at the board, you're going to be worried all the time. But if you have good setups, which is what turbo income is about, which is what all the processes are about. Process is the key, right? Pressing that trade button is the easy part. It's getting into it. And particularly in income, you always want to think of this very important fact, which is staying out of bad setups is as important as getting into good setups, right? So that is really a mantra for turbo income. I'm sure that sounds like Captain Obvious kind of stuff. And you're going to say, Hans, that applies to every kind of trading. It does, but in turbo income especially, it applies very, very strongly because You are doing trades that are taking advantage of edge, but if they go against you, you need to sort of do things to react to that. So let's talk a little bit about the market. Where are we here? Oh yeah, so we did this great AI special event this week. It was fantastic. I've been covering that space for a long time. I've written articles on it. I've been interviewed dozens of times on AI and big data industry 4.0. So that was really, really fun. We talked about some stocks that are going to do really, really great. I think that is going to be a theme. So you're going to hear me talking about that. You're going to be like, Hans, shut up about AI, but this is going to be a theme for a while. So let's talk about the good, the bad, and the maybe. Let's see what's happening in markets right now. We're going to see that flows are not as positive, right? They're not as positive. If you've been watching me for the past probably 5 or 6 weeks, I've been saying, listen, nobody's in this market. Nobody's in this market except retail. That has adjusted to some extent, which puts us into a little bit of a wheels spinning kind of environment, in my opinion. A little bit of wheels spinning, which is good for income. It's good for kind of harvesting that sort of higher level of volatility. Those options are kind of juicy right now, right? So that can be a good thing. We're not really going higher. I think there's still kind of underpinnings to the market as well that kind of keeps it bid a little bit. God forbid something terrible happens geopolitically, that can change, of course, at any moment. But right now, I think there's still a little bit of a bid in here. It's not as panicky, and I'm going to show you why in a moment. So let's take a look at the VIX futures curve. Still pretty good, a little flatter than it was. So it's just exhibiting maybe just a little bit of, caution. Here we are. Maybe we're having a little bit of trouble making new highs. Not that we should expect new highs every day. I think investors have been sort of spoiled over the last couple of years where we just keep bouncing back and making new highs. So maybe we do have a little work to do over the next few months. But if we look at the 9-day VIX versus the VIX, we're above 1. So I prefer to see this kind of below 1, maybe around 90, down in this range here. That's going to tell me that things are not as, not as worried. The market isn't as worried. There isn't sort of an underlying worry below the hood. So let's take a look at those flows again, right? So these are the same charts I've been showing you guys for weeks. So now, instead of being down here, we can see that institutional money is starting to come back. Hedge fund money is starting to come back. We have very, very big positions in gross leverage, right? So these big money people, they were wrong. Retail got back in. Retail flows have been phenomenal since April. And now they've kind of they've pulled back. I'll show you that in a moment. But institutional has had to get back in, right? So there's a lot of people out there, professionals, portfolio managers, hedge fund guys, all kinds of people saying, I'm about to get smoked if this market keeps going up. I'm going to underperform by too much. So we've seen the flows come back in. We can see gross leverage, net leverage, gross. Just think of it as, a little bit, they're levering up a little bit. If you take out sort of those levered bets a little bit, it would be what we call net leverage. So net leverage, maybe a little bit more room there, right? So this is kind of flows talk, and I think it's as important as it's ever been. So hopefully this isn't boring for you guys, but for me, I like to see where money is flowing to, because money is like water, right? It doesn't necessarily leave the market, although we've seen foreign money leave, but it's still, foreigners are still in. People focus on that so much. Foreigners still own, like 18% of the market. That's huge. Of course, it's come down a little, but it's huge. And I think if they want to get back in to US innovation, that can give us some fuel to the upside. So let's take a look here. Overall book, very, very high. So above where we were on Liberation Day. So overall smart money, as we like to call it, even though they're late to the party this time, is quite back into this market. So what does that mean? You can think of it as positive because everyone's getting back in, but remember, flows sometimes is a little bit contrarian, right? So when everyone's out of the market, which way can the market go? Well, it can go up, right? Because there's just, everyone's out or on the sidelines, and that's fuel to the upside. When everyone's in, there's nobody left to buy, right? So that's kind of that's the idea. It's not so much that they're right or wrong. It's that, well, if there's, if everyone's in, then it's difficult. You've got to find fresh money as opposed to money that's tactically moved out and wants to come back in. So we can see that leverage for all strategies, 99th percentile over 3 years, week over week, 5.8%. So we've seen some big moves back into the market. Have you noticed how this market, we get a little bit of, this is Goldman Sachs stuff, Carol. Really good research that I get access to. It's good to know the right people. So you notice that we get bad news, we come down, and we just keep bouncing back. And I've been saying it for this entire 4 to 6 weeks. Like this is money that is just waiting for any dip. Are they waiting quite as much now? Look at this chart here, net leverage. Look at this. This is the April lows. They have pushed back into this market. So we are getting to the point where you might almost look at this and say, once flows do their thing, which is either they get out because they're terrified, or they think tariffs are going to sink the world economy or whatever, they're getting out for whatever reasons, then they get back in. Now you get to a point where you can almost think of it as fundamentals start to take over, right? When the flows have rebalanced to some extent, then good fundamentals kind of have to take over. And the fact is, the market's kind of expensive. I'm bullish in general because of AI, what it's going to accomplish. So I'm not getting bearish at all here. And if the market goes down, I'm on the bid at a certain point, right? So I think there are some positive things still happening, and I think that's part of this rally as well. That people are kind of getting excited about the possibilities of this new phase of AI. Andrew and Hannah were talking about it last night. I was talking about it in my special event. I talk about it all the time in my newsletters and in my events because it really is that big. How do you not talk about it? It's big, and what I think people don't realize is that we're in a new phase of AI where it's not training. It's not training AI to know, to be capable of insight. It's starting to use insight and generate insight to improve productivity. So those great companies that can just come in and help industries and companies, those tech companies that can come in and go, hey, I'm going to figure this stuff out for you. You've got 700 silos of information, of data in your company across the world. We are going to take all that, we're going to lump it together, and we're going to start making sense of it for you. And I think that's going to be very bullish for those picks and shovels providers. I think it's going to be bullish for profit margins for certain companies. It's going to be disruptive. There could be some companies that get sideswiped, right? Like if you're in, what's the company, Chegg? If you're in, tutoring, well, guess what? AI just killed you because AI is going to slowly and then quickly take over. So here we go. Here's retail flows. Look at that. Boom. And then kind of tailing off here. So institutional back in, smart money back in, retail kind of taking their foot off the pedal a little bit. Market a little bit on the expensive side. I can see us kind of doing a little bit of wheel spinning, which is, and with options, there's a strategy for everything, right? When there's Momo out there, when there's momentum, you can do certain things. And when you think things are going to sit around, I've been saying for a long time, we're going to go up to 600 on the SPY. We're going to grind up to 600 and probably sit around. Flies and things like that could be good. So we are going to, let me see, before I get into this, so I think that's kind of what we're looking at here. Let's take a look at markets just quickly. We've looked at the VIX futures curve. Let's take a look at, where is my little itsy bitsy trading view program here? Hang in there with me. All right, you know what I'm going to do? I'm just going to bring it right up here. So, here we go. There's Mark. So we can see here, we're doing some trades in Turbo Income, of course. So here we are just kind of bouncing around, right? We're sort of flailing about. I think if we kind of stay above 595, pretty good. I mean, there's certainly a bit of a channel here that has been broken a little bit, right? So I think this is the kind of market where if there's an underlying bid, we kind of go sideways, right? We're not breaking out. It's not a breakout picture. It's a go sideways picture if you feel that there's a bid, an underpinning to this market from AI, et cetera. If you don't feel that there's that underpinning, then we certainly bring 580 back into the picture. We certainly bring that back into the picture. My MTI showing yellow, right? So we got a whole bunch of yellows here. I think that's this is my shorter term one. I think that's where you kind of get in here and you sort of take advantage of those high levels of option pricing out there. That's where you kind of go, we're not super bullish, we're not super bearish. We're going to harvest that income, right? Crush that premium. One of the things, I'm going to show you two things that are important to me. Rates, right? Yields are important because they were the thing that almost broke the markets back before Trump came in and said, hold on a sec, this didn't quite go the way I wanted it to. Let me move this over here so I can see your comments. How's everybody doing? What are you guys trading? Tell me what you're trading. Speaking of Goldman Sachs, I think my stuff, Hans. Okay, Jose, no pressure on me there. Speaking of Goldman Sachs, I think that's an interesting looking chart. Let's look at a couple things. I'm gonna look at financials in a moment. So we kind of see this TLT kind of bouncing around. So, the funny thing is on Iran, you kind of sold off a little bit. Now we're coming back again. And my thesis, Reddit, yes, Reddit is coming back. I have a big position in Reddit. I needed to come back. That's an interesting story. It's not like my top 10, but it has the potential to be massive because real life data is going to be coveted like you wouldn't believe. I mean, think of what the world is going to. We're going to have AI music, AI books. We're going to have AI videos. We're going to have AI movies at some point, I'm sure. We've got AI girlfriends out there. If you guys read about that, people have AI girlfriends. What's going to be real anymore? We're not going to have anything that's practically real. So I think it's going to be kind of a weird world, but real data is being coveted. That's why Meta is really doing well. That's why, AI girlfriends, look it up if you dare. There was an article a couple months ago. My husband is real. Sadly, if he was AI, you could just sort of turn him off, Vicky, when he irritated you. A few months ago, they were talking about how their son was like so into this AI relationship that it was like he was obsessed and it was becoming like a big problem. Like it was just completely bizarre. But on the other hand, it's going to help with loneliness, right? I always try to look at the positives, and there are going to be a lot of people out there, maybe the elderly, maybe, certain people, young or old, that are lonely. And why not? You get a dog to keep you company. Maybe AI. Hymns, Roblox. Yeah, Roblox interesting. I mean, I think if Roblox does well, big kind of community type stock, I think Reddit can do well. I think, but Meta doing well because guess what? They have everything. They have all that real data, right? So if you don't get real data, you kind of get this sort of circular regurgitation. And so the idea is that I think the purveyors of real communities and data, assuming people continue to go to Reddit for the community aspect, they may not go there to get information, right? They'll go there, they'll go to AI to get information, but they never maybe would have been a contributor to the community anyway. So it's not as big a loss as people think. But if people still like community and discussions and chatting, which I hope is always going to be the case, then they're going to have very powerful data, which I think they're going to start charging a shootload of money for. And they came out with a couple of features yesterday that are starting to show that they're moving in the right direction to be able to charge companies a lot of money. The Googles, these guys are going to pay up. They are going to pay up for real data. So it'd be interesting to see what they can do. But anyway, TLT, I do not want to see this break 85 again. I want to see this move up. I think rates come down over time. And I think if we look at IEF, this is your 10-year, right? So the 10-year, I think two important things here. If we see the 10-year rate start to come down, TLT start to push up, which means longer term bonds start to come down, I think the writing's on the wall, right? Like I think if you have money, I'm pushing into fixed income because I think we could be heading towards, I know a lot of people disagree. They think inflation's here forever because of tariffs and this and that. I think AI is going to be so deflationary that in a few years, we may see zero interest rates again. That sounds crazy, but we may see it. So I don't think this is a bad time to be getting into, yeah, I agree. Like for me, you may, I don't know, it's maybe crazy talk, but you may not see 5% rates like ever again. So I'm just saying it's an interesting thing to watch. And another thing I like to watch is ARK. Why do I want to look at ARK? It's Cathie Wood. Why do we want to look at her? She's always wrong. Well, she's created a lot of wealth and she's also destroyed some wealth. But I think as long as ARK is doing well, it's a sign that some silly money is out there, right? And I think silly money is going to be pushing into AI in areas like that. So I think that's kind of a positive for a potential sort of explosion in some of these kind of secondary names. So anything above kind of 58, 59 on ARK looks good. I want to see TLT in the 10-year. I want to see the 10-year yield come down. I want to see TLT firm. And those things are going to keep me constructive on certain themes, right? And so even if you didn't get into the event yesterday, don't worry about it. I am super AI focused in Turbo Income. So it's just a different way of approaching income. So let me go back to, I know, MML experts. What's an MML expert? Surf, Dance, and Hogan. Okay, so let's go over this quickly. So in Turbo Income, we look for the number one stock. To be honest, it ends up being 1, 2 stocks that we can focus on. And there's a filtration process. We dump them all into a funnel. And then what I do is I start with quality. If you think quality is not important, refer to the chapter I wrote for a certain market mastery book, where I talked about how somebody said, yeah, just sell options on Square back in 2021 before it dropped to 80%. Quality, free cash flow, quality stocks. I know everybody wants to go to the fancy, shiny, high premiums when they're doing their income trading. That's going to come with a lot of risk. Return on invested capital. This is stuff that can make your eyes glaze over, but I'm telling you, for the bulk of my portfolio, I will trade fun stuff. I've got an SOXL position on now that's killing it. I will trade the fun stuff, but only at certain times. I haven't touched it in 8 or 9 months because it only makes sense at certain times. Look at what does well over time in the sort of income world. High free cash flow, larger market cap stocks. Let's make no mistake, large market cap are going to continue to do well. They're making all the money, right? So like, if you count out MAG, I mean, I don't know about Tesla and a couple things, and Google I'm not big on, but if you count out MAG, I think you're making a big mistake. So we go through, figure out all the great stocks. Then I run it through the process. I end up with, here's an example. I ran this morning, 51 names that we're going to find stability, right? Because we want stability in income trading. We want stability. We want, as much as possible, we want a set of stocks that are going to give us that repeatable income without giving us heart attacks and losing sleep over it. Then I filter it down for option pricing. Why? Because we're at freaking option pit here, and option pricing is important. You want to go trade crazy stuff? You want to trade stuff that doesn't make sense? Absolutely. But I filter for where the options do not make sense to me. Remember, it's as much about staying out of trouble as it is about finding opportunity. And I might cross-check, right? So here, which I was talking about earlier, here's XLF versus the SPY. So once I start getting into some of these stocks, I mean, look at these stocks. We've got utilities. PowerGen is one of my favorite things, as Andrew's been talking about as well, and Frank. Constellation Energy. Retail, retail's okay, but retail discount, retail warehousing, freaking great. I recommended Costco at $5.50. Now it's what, $10.50? I was on TD Ameritrade doing that. I gotta get that picture out one of these days because I keep bragging about it. Fortinet, I mean, cybersecurity. Anybody doubt that cybersecurity is going to be an absolute must-have in your budget? There's no finish line, right? It's cops and robbers forever and ever and ever. The bad guys are developing and innovating, and then the good guys have to kind of catch up to them. So we're going to look at certain relationships sometimes too. Look, here's financials versus the SPY, looking good, coming down to that 200 day. This is an area where if you've been in Turbo Income, there are certain financial names that I'm really, really excited about. You're going to get them if you jump into Turbo Income, which you can do in a variety of fashions. Christian's going to drop those methods in the chat, but you're going to get all this insight and then actionable trades. Here's ARK versus the XLK. So this is a little chart. Let me make this a bit bigger. Here's ARK versus the XLK, which is your bigger cap, NVIDIAs and Microsofts. And while I do like those stocks, as long as this thing is up, this ratio is up in here, I'm happy. Right now it's here. And I think the silly money has a little ways to go. I think we could get back up to this ratio. So I'm still okay with silly money trades at the moment. I think they'll pull back eventually. And then I think that's going to be a time to load up again. So that's kind of fun stuff to watch always. Consumer staples. Now for your defensive, look at how consumer staples have been out of favor, right? That's defensive. Defensive has not been in for a little while. Look at where it was really, really in versus the SPY. Now it's come down. So I think that's also an interesting place to position if you need a little bit of defense in your portfolio. That's where I'm going to start noticing more on my list. When I do my filters, I go, oh, here's a bit more of a defensive name. It's been crushed a little bit. Maybe we're getting some nice premiums, and that's going to really, really work for me. Then the last step is I'm dropping this stuff in here. This is not from this morning, but I drop it in here, and we take a look at what we've got left. Might be 15, 20 names. And then I'm going to use my final step, which is my vol yield. And the vol yield is what gives you the best of all worlds, right? That is your return to your risk, to the volatility, to the risk that is out there in other ways. And I won't get into it, but I look at parameters surrounding where that option pricing is. And this gives you a number. So right here, we can see 68 is a high, 71. So we've got booking holdings in there. We've got MasterCard rating highly. We've got Costco rating highly. Sometimes you see some of the same names in there. So some good stuff. And so what do we have? Well, we have basically, we've got a whole bunch of positions open. I think almost all of these are up quite a bit. I think the Uber isn't. That's a slightly different trade. We've closed. I don't think we've had a loser in the official trades portfolio. Sometimes I do some other fun things on the side, and we've had more good than bad. But in the official portfolio, which is very limited capital, right? So people always ask, well, do I need a lot to get into this? No, you can. In the traditional income trades that we do, you can get in for very small amounts of capital, $600, $800, $1,000 to put on a trade that could make you 20, 25% kind of thing. Here's our other portfolio. We closed out all these longer term positions, all of them for big wins, 25, 37, 41, 54%. That's not making like $100. That's making like 800, 900, $1,000. That's like making 54% on a $1,700 bet kind of thing. And then of course we have, these are other trades, some of the cash machine trades that I like to do, one winner so far. We've got another one on in Hood. And then I've got a little fun portfolio here because I can't help myself. I'm a degen, and the Bitcoin income portfolio doing fantastically well. And you can do this with small accounts as well. I happen to have 2,000 shares of this, but income on Bitcoin, which is basically my whole premise is there's a time for income and there's a time to do other things. And so this is the income portfolio for Bitcoin. So lots of fun. So Christian, I don't know if Christian has put it. Oh, he has. Oh, Ted's put it in there. Ted. Oh, no, wait. That's Ted at the top. Christian, can you drop a link in there? Oh, here, I'm going to drop it in there too, since nobody's watching, which makes me sad. Okay, there we go. So you can get into Turbo Income. I encourage you to do it. It is a fantastic, fantastic program, and we're always chit-chatting about stuff and finding opportunity and strength in numbers, right? Strength in numbers. So I'm going to let you guys get to the next class. I hope you've enjoyed it. I hope you've taken something from it, and we'll see you next Friday, and we'll talk about what's going on after the Fed. Thanks, everyone. Mark and Terry.